Hello traders, finally we are back on this YouTube channel, and today in this video we'll speak about how to use top-down analysis and how to use higher time frame, lower time frame, middle time frame and such facts, okay? Because so many traders are getting lost and they are losing so many trades. Why? Let's say if you are a swing trader, of course you should use higher time frames such as daily, weekly, maybe 4 hour. If you are a scalp trader, of course you should use 5 minutes, 1 hour, 15 minutes maybe. So you should not get lost. Let's say if you are trading daily time frame and then next you switch to 1 minute, of course you will get lost because you are not using logical time frames, and that's why you are keep blowing your accounts, keep losing your accounts. And in this video I will tell you exactly when to use, let's say, higher time frame, lower time frame. Okay, so you need bias. After the bias and trend, you should find the correct setups, where is liquidity, where is your take profit target, and once you have the mitigation or price hits your demand, POI or supply, of course you should switch to lower time frame to find your entry model. Okay, so the lower time frame is the time frame, the one time frames that you should execute. Okay, so you should not execute on higher time frames. Why? Because you will have minor risk reward, let's say. Okay, in lower time frame you are flowing with the trend, you are following the market, and you have nice logic behind it. Okay, you have all the confluences and you are catching better and high risk reward trades. So let's get to the charts. I will show a couple of examples and I will show you how to use the correct time frames. Okay, so let's say if you are day trader, I will show you which time frames you should use and which time sessions you should trade. So see you and let's see. So now you can see the screen, and again I will repeat. So we have three main time frames, okay? The aspect and segments of time frames: high time frame, medium time frame, and lower time frame. We use high time frame for what? For directional bias and also trend. So what does it mean? It means like, is our trend bearish or bullish? Are buyers in dominant part or sellers? So you should pick the trend, and if you have series of higher highs and higher lows, it means that now buyers are in control and you have trend of bullish. So what does it mean? It means that you should be looking for buys. But if trend is bearish and your direction bias is bearish downtrend, now it means that you should be looking for sells. Why? Because now sellers are in control and they want to move price downside. After that, when you have chose your trend, you will switch to medium time frame, and here now you will mark up your liquidity points. Also you will find your sections, where is your demand zone, where is your premium discount, and also where is your breakout structure, change of character, and that kind of stuff. Okay, so now you are finding the setups and POIs. After that, when you have marked all these criteria, you can say, you will switch to lower time frame. And why we use lower time frame? Because in lower time frame now we are about to execute trades. Okay, so once you get the mitigation of POI, demand or supply zone, you will switch to lower time frame and you will find your entry model and you will execute buys or sells. Okay, so here I know so many traders are using time frame, like combination of the time frames, incorrectly. Okay, that's why they are losing, they get lost and that kind of stuff. So here, what you can see, we have logical time frame switches. So if you are, let's say, day trader and the swing trader type of trader, you should use daily, 4 hour, 1 hour, and you can also use weekly. Okay, if you are swing trader. Okay, that kind of time frame. So in these two time frame, you will find direction bias, trend. In 4 hour, you will set up you will find the formation, also liquidity points and that kind of stuff. And on 1 hour, you will execute trades. If you are day trader, of course, you can use 4 hour, 1 hour, and then 5 minutes. Okay, on 5 minutes, you will find the setups and you will execute trades. And if you are you can also use this time frame if you are day trader, and of course if you are scalper. Okay, 1 hour, 50 minutes, and 1 minute. This is amazing time frame combinations, but so many traders are using this combination and this is very strong. Okay, once you understand the market. And you can also use only 50 minutes and 1 minute, but if you are only scalper, okay, but you will get lost. I would recommend you guys, using minimum 1 hour, okay, minimum. And the incorrect and illogical combination of time frames are daily, okay, once you are using daily, and then you will switch up to 5 minutes or 1 minute. This is incorrect, guys, okay. There is no logic, there is no confluence, and you will get lost. And also, if you are using weekly and then you switch to 15 minutes, like, don't use that kind of combinations. It is like, I don't want to like use how can I say rule. I don't want to be a rude and mean, but don't use this kind of time frames. Okay, it's illogical, and use logical time frames. Why? Because you need to be profitable. Okay, you need payouts. You want the payouts, and you want to be a profitable. That's why please use this kind of time frames. Now I will delete everything here, and I will show you examples how you can use time frames. Like you can switch to daily, let's say, and what I can see on daily. We have this beautiful demand right here. We have breakout structure upside. And also, why we mark this demand? Because this demand sits very well in our discounted price range. Okay. And also this demand is in 71.79. So for me, this is a very nice demand. Now we will switch to 4 hour, and let's say what we have. So we have mitigation of this demand right here. So price mitigated our higher time frame demand, and price gave us nice reaction, okay? Nice reaction upside, and price mitigated our demand zone. Right here you can see we have demand mitigation. And what we should do now? You can switch to 1 hour. Why? Because I told you guys. So daily, 4 hour, and 1 hour. 1 hour, okay? Let me delete everything here. And what we can see, I can see on 4 hours that price mitigated our demand. We have our setup, formation of the setup. And you can see here price respected our demand zone. Okay, so we had imbalance right here. Price filled this high time frame imbalance. We also have liquidity sweep right here. Price swept liquidity. And what price did? Price gave us change of character. Okay, so we have now change of character. It means that this demand was strong, and now buyers are moving upside. Okay, so we have higher low and higher high, higher low and higher high, because price gave us another breakout structure upside. Now we have bullish order flow. It means that now we should follow the buyers and do not open sell orders. Okay, now what we have, we can switch to like 15 minutes also if you want to check all the time frames combinations. And now what we see, this is our higher high. So it was our recent higher high, but now price printed new higher high, and it was our higher low. Now it means that we have this range. Okay, so we have this range. But what price did? Price gave us correction and then impulse, and price broke the structure. So what does it mean? It means that now price printed new higher high here. And now what does it mean? It means that now our higher low has switched to here. And we have new leg. We have new leg available right here. Let me mark. So from here to here, this is now our leg. So we are now controlling these demand zones, and what will happen right here. You can see we have nice mitigations and liquidity sweeps right here. Also breakout structure price mitigated our demand and gave us new higher high. So there is no logic if you are looking to buy from here, because now we have newer leg. Let's see what happens. Okay, now price is about to print new higher high, and let's see. Let's wait. Now we can see we have new high. So this is our higher high, highest point, and this is our lower, higher low. It means that now we have this range from here to here. And it means that now we can use our Fibonacci numbers, and let's see where is our premium and where is our discount. Okay, we can switch to 1 hour. Let's see for our setups what I can see. So we have very nice demand zone right here that sits very well in our 71 and 79. We also have imbalance, and we have all the confluences, we can say. So now I will mark from here to here. because it sits very well in our 71 and 79 discounted price range. Let me delete this one. Okay, so this is our demand. Now, so many traders will say, yes, but we also have demand zone below. Great question. Okay, great question, but what happened? We had a nice movement, then price pulled back and filled inefficiency. So maybe on 1 hour or 30 minutes, we have demand mitigation right here from this candle. And now it means that this demand is mitigated and imbalance is filled. Half, at least half. And also we have lower time frame demand here. And another confluence is that we have our Fibonacci numbers, okay? Right here. Sits very well in our 71 and 79. It is golden range. So that's why now we should wait for our confirmation. But if this demand fails, okay, let's say something like this, then you can wait for confirmations from here and execute buys from this demand. But now, because we have done so many researches, videos, backtests, and we have experience, we know that price is high likely to respect our 71 and 79 Fibonacci numbers. So let's see. Now we are waiting for the mitigation, and we can switch to lower time frames once price mitigates nicely. Okay, let me return right here. Now let's switch to 1 minute, and what we can see, price mitigated, and now we are waiting for confirmation. Nice. Okay, nice, amazing. Here we had liquidity sweep. Here also price swept liquidity. We can mark. So we have liquidity sweeps, couple of liquidity sweeps, and we have our high here. Okay, we get here. Sorry guys, right here. So this is our change of character on 1 hour time frame. Okay, on 1 minute. Sorry guys, 1 minute. Yes, you can also use this one, but it's correct. Okay, both of them are correct, but I want to take out at least this high because price swept liquidity and we don't have body closures below, and it is another confluence. It means that now sellers are not really in control. They don't want to move price downside, and they are just taking out liquidity and moving upside, taking out liquidity and moving upside. Okay, that's why we don't have body closures. We have just shadows. Okay, this is wicks, and here price we had nice engulfing candle, so you will open buy from here. Why? Because this is our one of the nicest entry models on 1 minute and 15 minute time frame combination, because here we took out lower high and with a body closure. So we waited for body closure engulfing candle. If price closed below here, we won't open buys, okay? But because this candle closed above this high, it means that we have change of character, and now change of character is confirmed, and our stop loss will be here. So you can set here, but I am always giving some space, adding 1 pips maybe. So here, and now where is our take profit? For take profit, you can use 1 hour on 50 minutes. Okay, let's use 50 minutes. And what we can see, first of all, I can see we have this higher high, and we know once we have a bullish trend, price is always taking out the higher highs. Okay, so what does it mean? It means that we have higher high, we had higher high here. Price took out higher high, then we had correction. Again, price took out higher high. Again, we have correction. Now impulse, and price will take out higher high. It's our logic. But of course, like me personally, I love to use maximum 1 to 10 RRs, maybe take some partials at 10 RR and let the others run. And I'm minimum trading 3 RR and maximum 10 RR. So here what I can see, we have nice liquidity right here. Amazing liquidity. Amazing. Also right here. Okay, we have liquidity points. What does it mean? It means that price did not took out this high, also this high, also this high, and this is all liquidity. Okay, liquidity, 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 liquidity. Here also liquidity. So we can target maybe this high. It gives us 10 RR. Amazing. For me, it is amazing. Okay, or you can target here this high. Does not matter. Okay, or you can also target this high, maybe 3 RR. Amazing. Okay, guys. Everything above, like from the 3 RR, it's, how can I say, perfect for me. Okay, it's perfect. So let's see what happens now. let it price run. Boom, okay. Price took out all this liquidity. This one also you can see, okay. And price now is correcting, okay. We had nice mitigation. We had all the time frames. We had daily bias. We had 4-hour mitigation, change of character, liquidity sweep. Then we switched to medium time frame, 1 hour, 50-minute time frames, finding our setups, POIs, liquidities. And then we switched to 1 minute. Why? Because this is our lower time frame. This is where we execute our trades. And what price did? Price gave us beautiful reaction and took out all this liquidity right here, giving us 1 to 13 RRs. So thank you guys for listening. Wish you all the best, and maybe follow me on my new Instagram account. This is my new Instagram account, okay? And follow me on my YouTube, and also join our free public Telegram group. It's in link in bio. And if you want to learn from us and also join, learn from us and join our premium team, okay, we are sharing analysis. We have personal trade signals, daily forecast, weekly forecast, everything. We also have general chat. You can see these traders are catching amazing trades. Look, amazing 6 RR trade. Look at this. Members are killing the markets, okay? All the members. So see you soon in the next video, and wish you all the best.